Hello, trading has closed on April 22nd, 2022. We always start with our disclaimer. Excuse these crosshairs. TradeStation updated their program today, and I don't know how to get rid of them. It's my trading plan for Monday, April 25, 2022. Remember, I can be wrong. Any trade should be at your own risk. If you like it, please click like, tell your friends. I've had some more people order the webinar. Please, without your email address, I don't know how to send it to you. So please put that in a conspicuous place. I still get people ask me how to get the webinar. You can order it from paypal.me/MEJT system. I have people ask me where to get my book with the rules. Get them from online booksellers like Amazon or from the publisher Harriman House. Enough of that. We had a higher MEJT target, 44.33.17. We said unless we gapped down smartly, the rules called for it to print. But even if it did, that didn't mean we close up. But we gapped down smartly, so that failed. But there's no call when we gapped down smartly. And needless to say, we traded lower. Here's what we said. These are the weekly patterns I'm predicting for next week. Prior to getting into what happened at the close today, which I think could be significant, I want to call everyone's attention to this pattern we talked about when it happened Tuesday night, something I call the coup de grace. It puts an end to the rally. I hadn't seen it the day of the rally before, but as I said at the time, I've only seen it near tops, and this is certainly a top. Higher prices did print during the day, higher than I would expect, but as far as closing prices, that was it. This is a pretty reliable pattern in my experience, even though it's pretty rare. Well, this is 2 days in a row of straight line drop. That doesn't happen very often. They actually took us under the FOMC price from March, the last meeting. It pays to keep track of these prices. Here was support. Right here at the end of the day, it was resistance. By trading under it significantly, as long as it isn't reversed immediately by gapping and taking out this high, we should trade in general under this line by at least as much as we traded over it. And if that works, and it works pretty often, calls for a drop of over 321 points, which would take us to 39.95 or below. Doesn't mean we have to go there tomorrow. During the day, MEJT gave a sell signal in the afternoon, certainly worked, was an optional higher target. We came within a few points. I don't want people to be crossing their fingers and hoping for higher prices here. But if we do go over this white line, which is the higher optional target, any resistance it would offer should have been eaten away by this. And if we do gap up, which I'm not predicting by any stretch of the imagination, could be a strong rally. With about 20 minutes left to trade, we had this drop all day and prices were over all these lows. That's a bullish pattern. It's an inability to hold on to the lows. 20 minutes left to trade, we had a wall of selling into the close, which is how I describe a panic, because it's not going to be institutions selling at this time. Now, sometimes, particularly on a Friday, sometimes the people who panic have every right to panic. And if it is a panic, and if we are going to crash, we should gap down. And if we gap down Monday morning, which is entirely possible, could be a long way down. We'll go over how far. They've already set over 300 points. But if this is just a panic, it'll be reversed promptly Monday by gapping and taking out this high. And if that happens, there could be a strong rally. So I think the open is going to be telling. But regardless of what happens in the short term, we're going much lower in the intermediate to long term. Had a long-standing target, 39.09. Nothing we've seen changes that. Let's focus in on these waves. Well, if we do hit the 39.09 target, today's low is right at the 50% point. Sometimes, if the target's right, you stop at Fibonacci places. So if we do rally from here, it would be right at the Fibonacci target. Doesn't mean it has to happen, but if it happens, and if the target's right, you could explain it. That's not the only support, though. Well, this was my main count, not the only count. I don't see any way in this count you can count this wave as being over. But we do have, in addition to the wall and to the close, we do have non-confirmation by MEJT. So let's look at a different way that you can count this. This count doesn't break any rules. You have an A, a B, and a C. C is twice A. There's an A, B, C for C. That all works perfectly. This is a fib target of the prior consolidation. So, forget the colors here. I think I mixed up my reds and my blacks. But if we do stop here, at least there's a count which can explain it. Let's look at a different means of showing support. This was the low back in 2000. Instead of taking the day of the low, let's take the low prior to the low, which often can be very significant. And let's draw a trend line. I don't know why this won't play ball with me. Let's draw a trend line right from that low. You'll see how it connects with these lows, and we hit it right on the nose today. So that's trend line support. And the rule is when you drop to a trend line but not through it, either you gap under the trend line or the trend line wins. So if we're going to continue dropping, we really have to gap under today's low, which of course is entirely possible. Otherwise, that's strong support that goes back a couple of years. Now, even if we do bounce, it shouldn't hold. This dark blue line here is something Tom DeMark calls a TD line. The break under this is a valid break. Calls for a drop of 362 handles under the line. It's a target, it's not a stop and reverse. Now the line's going up, so you can't say exactly what the price is, but that target's over 300 handles. The Fed whipsaw target's over 300 handles. My wave count target's over 300 handles. So regardless of what happens Monday, I think the odds are pretty good we're going to have a 300 handle drop. Doesn't mean it has to start Monday. Doesn't mean it has to happen in a straight line. If we are going to continue down Monday, you really want to gap under this low, because sometimes panic is the right thing to do. But if we gap up instead and take this out, there could be a pretty strong recovery, even though it won't last. So this has ominous long-term implications. But that doesn't tell you what will happen Monday. Monday's pattern has the early high. We could still get down. Typically, it's a bearish day with a low in the final hour, but despite that, many times this day in the cycle recently has been bullish instead. The FOMC whipsaw and the DeMark TD line break both target a drop of over 300 handles doesn't mean we drop Monday. We drop to significant resistance. If we're going to keep going down unabated, we have to gap under it. Bulls can hope the wall into the close, which doesn't always work over the weekend. The volatility index over the upper Bollinger Band, the put-call ratio over the upper Bollinger Band will come to the rescue Monday, and there's a wave count that can justify that. Just remember, crashes only come from oversold conditions, and we're certainly oversold. And even if we do rally, the decline shouldn't be complete, and I have a target over 3,900 cash for some time, and I'm sticking with it. So if we gap down, you can't rule out crashing here, but there's no guarantee we gap down. And if we gap up smartly instead, which I'm not predicting one way or the other, could be a strong move. In the long run, though, look for the 3,900s. Tomorrow has the early high, Monday has the early high, and that's my call.